Hello, everyone. It's that time of the month again. We're going to be looking at the latest statistics for the Toronto area's housing market. We're going to be looking at what's going on in the low-rise housing market. We're going to look at the condo market separately. We're going to look at some statistics for the condominium market. And I'm going to wrap up with some thoughts on what we should be keeping an eye on in the fall market and my general outlook for the fall as well. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make better real estate decisions. If you'd like to meet with me and my team, you just click the link in the show notes below or send me an email at askjohn@movesmartly.com. So let's kick things off by taking a look at the market for houses. Sales in August were down 3% over last year, just over 3,000 sales. Pretty soft volume, not a ton of activity. Below, I mean, it's kind of very similar to where we were in 2022 and 2023, but those were pretty soft years in terms of sales volume, well below historical trends. New listings were actually unchanged over last year, just over 7,000 new listings. But active listings were up just under 12,000, up 30% year over year, 11,862 number of active listings for houses in the Toronto area. Now, when we look at the months of inventory, which is just looking at the total active listings divided by the number of sales, which tells us how quickly it would take for the market to clear if no other homes came in the market. We're at 3.9 months, up slightly over last month. Which is relatively high for the GTA. I mean, if we look back, at least this data goes back to 2015, so almost 10 years. We're pretty much at the highest. I mean, last year was actually a little bit higher, just right about 4 months. So relatively soft market. I mean, we saw last year the market rebounded after inventory peaked. We'll see what happens this fall. But right now we do have a relatively sluggish market for the GTA. And what that means is just fewer homes selling quickly, fewer homes selling with multiple offers, 30% of homes selling for over the asking price. At the peak of the market, we would have seen, 60, 70% or 80%. In a softer market where there's a lot of inventory, not as much demand, fewer homes are listing to try to get multiple offers. So more homes just sitting on the market, and a lot of buyers, and a lot of homeowners see that. They see a lot of for sale signs. They don't see as many sold signs these days. And again, that's because the market is a little bit slower right now, a little bit less competitive. Average prices down 1% to a 1.318. So not a huge dip, but slight decline. And I think it's the third or fourth month in a row actually of kind of low 2-3% declines for the low-rise market. Now, when we look at the condo market, again, sales for condos are down 15% over last year, so just under 1,800 sales. New listings, again, also just like low-rise, were unchanged, just under 5,000. But active listings were up 43%, just over 10,000. Now, what's interesting is this is a slight decline from last month. And again, it's tough to say what causes. I mean, part of it certainly is that, a lot of people whose units have been sitting on the market, once August hits, they just cancel them and will relist them in September. But again, I think we'd have to look at the data a little more closely. But this is an interesting trend to see active listings dip a little bit. From July's statistics. July had the highest number of active listings for condominiums in any month in any given year. And we're seeing a little bit of pullback, and we'll see that if that extends into September. When we look at months of inventory, we're at 5.7 months, down slightly over last month. Not a huge difference, but again, 6 months of inventory practically is quite high, and sort of probably the highest level clearly over the past 10 years or so. So a very soft market in the condominium space. Anyone who's listing a condo sees that. You get a lot fewer showings than people were getting even 6 months ago when things were a little bit more competitive. We look at the data, early this year, we had 3 months of inventory, which is a far more competitive market. Things really slow down for the condominium market, partly as we're seeing a big increase in new listings, and we're seeing buyers, obviously investors, pulling back as well. When we look at the number of units selling for over asking, 21%, quite soft. Clearly, it's never usually as competitive as the low-rise market, but again, we're seeing fewer condos sell for over asking. And condo prices down 6% year over year. I mean, and this is an interesting trend. This is also maybe the third month in a row where prices have been down year over year, but for the past 3 months, they've kind of been down maybe 1-2%, maybe 3%. And this is the first month where, we hit 6%, which is obviously a more meaningful number. So I think one thing we'll have to keep an eye on is if this trend continues as we move to the fall market. Is this kind of the beginning of some investors, some owners just throwing the towel and just deciding to reduce their prices? Or is this just a one-off trend for August? And we see some stability in prices next month. It's a coin toss. We'll see what happens with prices, but obviously an interesting trend to see prices down year over year, 6% for condos. Looking at the condominium rental market, number of leases up 36% year over year, just over 7,000 leases. The number of new rental listings up 21% over last year. Again, we had a high number of completions this year, which is why this year's number of new listings were quite a bit higher. And active listings up 84% compared to last year. So quite a few more condominiums available for lease on the market. But things are moving. We're seeing obviously a ton of rentals happening, but it's taking a little bit longer for some investors to find the right tenant. Average condo rents down 6% year over year. Over the past few months, we saw rents tick up a little bit. Again, part of that is seasonal, but we're down 6% over last year with average rents hitting about $2,800. So some thoughts on the fall housing market outlook, or my outlook at least. I'm going to kind of take the screen off and just focus a little bit on chatting some of the key trends. So the fall is an interesting kind of period that we need to keep an important eye on because it's sort of the start of the second busiest season. I mean, spring is obviously the busiest and fall's the second busiest. So most people, when they enter the housing market, they're either looking at buying in the spring or they're usually looking at buying in the fall. Very few people jump in and decide they want to buy a home in July or August. So fall is quite important because a lot of the buyers who were looking usually hit pause in the summer and they jump back in September. But also we have a new sort of group of buyers who want to start their search. So the key things that are important to keep an eye on, of course, are this relationship between demand and of course, listings. So demand being measured by sales and supply in terms of new listings. And at the end of the day, if sales or demand, outpaces the number of new listings that are hitting the market, what typically happens is that inventory tends to decline. Months of inventory tends to decline. The market starts becoming a little bit more competitive. But if new listings are growing faster than sales and sort of the new demand from buyers, then inventory, of course, picks up a little bit. And we see months of inventory pick up in the market, cooling further. So what do I suspect is going to happen in the fall market? I mean, my instinct is the market for houses, low rise, will be a little bit more competitive than what it was in the summer months. So I suspect that sales will probably outpace new listings. And we might see a little bit of a decline in months of inventory. I'm not expecting a huge rush. I'm not expecting us to return to every home getting 20 offers, but I have a feeling it's going to be a little bit more competitive this fall market. We're seeing it on the ground. Some buyers just deciding to jump in, taking advantage of the slight dip in rates. But again, with the idea that, rates are going to be even lower a year from now. Most of the clients we're working with are not locking in 5-year rates. They're kind of going with 1 or 2-year rates with the expectation that they're going to be renewing at a lower rate next year. Some people are kind of jumping in now, thinking that the market is going to be a bit busier in the spring, wanting to take advantage of what is right now at least a sluggish market, slower market, where buyers have more options. But again, I don't think it's going to be an insane market because a lot of buyers are still waiting in the sidelines. A lot of buyers are waiting for rates to drop further because that in their minds is going to help them increase their home buying budget because it allows them to spend more and take on a bigger mortgage. So not everyone's rushing in, but we're starting to see a slight uptick in interest from people looking at low-rise houses. So I suspect the market's going to be a little bit more competitive for houses. When it comes to condos, I mean, honestly, it's harder to say. It's a bit of a coin toss because the condo market, unlike low rise, is driven a little bit more by investors and they have a bigger impact on the market. Investor demand is going to stay soft. We'll probably see some end users jump into the condo market, so we might see a slight uptick in sales, but probably not as meaningful because, again, investors typically were a big share as well. But the other caveat is that we have, of course, investors who some of them are looking at exiting the market. New listings for condominiums, if we look from January to August this year versus last year, I think are up something like 24%. And again, part of this is just driven by investors exiting the market. Now, what happens in the fall, and I've talked about this before, is largely going to depend on how investors react. If more investors start taking their units off the market and saying, you know what, forget it, the market's slow, I'm just going to list it for rent, that will effectively kind of cool inventory. Months of inventory will probably dip a little bit. The market will not be competitive, but will be stable and maybe a little bit busier. But if we see investors not doing that and deciding that they need to sell or wants to sell and renting isn't an option, we may see inventory build. So it's hard to predict what's going to happen, obviously. But again, I think these are the trends that we need to be keeping an eye on. It's this relationship between listing sales and the volume of each that are coming on the market in terms of demand and the supply of new listings that we're going to be keeping an eye on in the months ahead. I hope that makes sense. If you have any questions, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.